Hi and welcome to another episode of Monday Market Outlook. It's looking like it's going to be another chill week in the markets as we look into the bull bear index here. Thanks to Mike Tan for these charts. As we see here in the graphs, there's only a slight advantage between the bulls and the bears in the market, and we are still currently in a standstill. If we look at market breadth for PSEi, we can see that the market is evenly split between stocks with momentum and stocks that are bearish. So if we look at the PSEi chart, it's currently at a critical zone, so we are back to where we were a couple of weeks ago. We formed a lower high here, which doesn't really bode well because we might see a corrective wave here moving to the downside. However, if we look at this price channel here, this confluence of support could also mean that the PSEi could potentially bounce off of this support level and ideally make a run towards this confluence of resistance at 6,800. So that would be the ideal scenario, right? But the wick here, the rejection wick here, shows that buyers were ready to come in at these levels and help keep the market within this consolidation area here. So a breakout of 6,640 resistance zone could confirm an uptrend towards 6,800. Now, if we look at some individual issues here, BDO touched our buyback zone 131, right? BPI also at a critical support level. Metrobank in the middle of nowhere. Aboitiz Power still having trouble breaking through the 38 resistance in the middle of nowhere also. Semirara hitting resistance as expected at 29. Hopefully we can either find support at 28 or a retest of 27 and for a double bottom possibility. DMC, same thing, middle of nowhere. URC pulling back. This is the 61.8 fib. Could be good time for buyers to enter. DNL also at 61.8 fib. Watch out if this support level holds. If not, we are going to our next support at 7. SM also consolidating at 900. AC as well consolidating at its most heavily traded zone at 700. Resistance is at 712. Right? JFC also, it could settle down here at a heavily traded zone. It could consolidate at 230 to 240. Apex may be a good time to enter. Right? Bloomberry also a good flag pattern here, and AREIT with a sell-off last Friday, which of course coincides with its X date. But we see a good rejection week here, which means that buyers were ready to scoop up shares below 33.65. At this level, AREIT yields are at 6.18, a very attractive yield for AREIT. CREIT also a sell-off last Friday, but at the current levels, 252, that gives you a yield of 7.4%. Right? So also not a bad level, right? Ali, we see here a triple bottom. Does the BSP pause in rate hike signal that this could be a good time to enter into real estate, as Philippine interest rates are at a pause? Going back to the PSEi, right, since most of our index stocks are at critical support levels, what we hope for next week is for our issues to bounce off of those support zones, which could help the index hold its support at 6,500. Talking about interest rates, last week we were monitoring some important economic data that could help us determine whether the Fed is going to raise interest rates by another 25 basis points. Now, if we look at the results, services PMI up, new home sales are up, GDP better than expected, price index hotter than expected, initial jobless claims lower than expected, PCE index, a very important indicator for forward indicator for inflation, also hotter than expected at 0.4 and 4.7. Now, these economic data basically summarizes the fact that the US economy is still strong, and this is not what the Fed is expecting, right? So this now builds a case for the Fed to raise key lending rates by another 25 basis points in their meeting in July, right? So the possibility of this has increased to 53% from zero just a few weeks back. So if we look at the Fed futures chart here, this is for September, right? This is for September. So the market is already starting to price in another 25 basis point rate hike. So we are at 5.25, and the market is now expecting the Fed to raise interest rates to 5.5. So the market is starting to realize that to be a big possibility. But if you look at the December Fed funds futures, right? It's currently at 5.07, which means that the market is expecting the Fed to cut rates 2 times from September to December, which really doesn't make sense. No? Given the strong economic numbers, it is highly unlikely that the Fed will do that. So this is really a main cause for concern for a lot of investors, because there's really a big disconnect between the markets, the Feds, and how the S&P is performing right now. So if we look at the S&P 500 against all odds, it's at 4212, which now puts the S&P 500 into bull market territory. So remember, ever since its throw, we are now 20.6% up, which is the technical definition of a bull market. So as the S&P 500 has entered into a bull market, all the more that a lot of bears are experiencing a pain trade, right? So if we look at what happened as predicted, right, we will see a test of this extreme zone and then make a run for this resistance zone here at 4,200, where we could potentially see the bears take control. However, the market threw a monkey wrench in the form of Nvidia, right? It was the talk of the town last week as Nvidia came out with spectacular earnings and forward guidance that put Nvidia into almost $1 trillion valuation, way ahead of Tesla and Meta, right? So only a few companies are at $1 trillion valuation, and this includes Microsoft and Apple. You see, despite all the indicators, Dr. Copper trending down, high yield bonds trending down, and if we look at the options expirations this week, we see a put call ratio of 3.2, right? So we have here the extreme zones 423, 410, 415 as max pain. Despite all of these forward indicators pointing to a market sell down, as we've mentioned time and again, right? There's just too many puts into the system that makes it difficult for the market to go down. So as we go back to the S&P 500, see how these extreme zones fit into how the market has reacted for several weeks now. So if we plot this 423, right, 423, 410, and max pain level here at 415, right, this puts next week's price action again into this range. Now let's look at the Nvidia chart here. Look at that strong move. It gapped up 28%, settled down at around 26%, and then the next day it was able to hold that level. This is very typical of market bubbles, right? So if you look at the weekly charts, anytime you see two outstanding candles, right? So this candle is not exactly outstanding, it's just right, but look at this, right? Look at this candle. It's similar to these two outstanding candles way back, right? So what happens when Nvidia hit that bubble here, right? So we have 1, 2, and the third week it already showed sign of weakness. If we are going to look at that same bubble here, right, we could probably expect 1-2 weeks before the AI bubble settles and we can see the market come back to reality. Now remember, the same bubble happened, no? If we look at Moderna, right, see, it's the same candlestick pattern. We have 2 outstanding candles. That hype continued on for another couple of weeks, dragged on for another 3 weeks, trapped investors here before it collapsed. Now, if we look at the 3D printing bubble also, 3D Systems Corp, look, right? Outstanding candles here before it collapsed. Because every time we hit a parabolic move here and we see outstanding candles week on week, and there's nothing here on the left side of the chart, that uh, that basically indicates some form of manipulation in the markets. So if we go back to Nvidia, it's obvious by now that there's some form of manipulation happening in the markets, right? So if we look at the Nvidia bubble, we might see another couple of weeks before the AI hype settles down. We might see a correction pretty soon, right? So if we look at the S&P 500, this is the weekly chart. It's not altogether impossible for the markets to actually take a stab at this level here that we have been monitoring for quite some time. So remember, we've been looking for the markets to potentially hit 4,280 or 4,300, and that is looking like real possibility at this point. So we may see the markets go up, challenge that level there before the market corrects. So we are still seeing a lot of bullish movement in the S&P 500. So at this point, it may still be too early to go into the defensives. And if you are going to ride the AI hype, you have to be pretty nimble and expect that this run up, this run up to 4,300, if at all possible, will be short-lived, and you have to get in and out pretty fast, if you want to make a quick buck, right? So that's it for this week. I hope you found this episode useful. Please like this video, subscribe to the channel, and of course, good luck on your trades, manage your risk accordingly, and I'll see you again next week.